Take a look at the NASDAQ, almost down 2.5%, a near 650-point decline, as many of those names, as I said, in the chip space, Micron, AMD, Intel, Broadcom. Let's show you exactly what's happening right now in real time, because they're all under significant pressure. Weiss, I think the question everybody is asking is, did Broadcom either spook the market in some sense, or was it just enough to cause a rollover in these names that some had been warning was inevitable, given the runs that they all have had?
It's the bottom line is, I don't know. I don't think anybody knows, but I'll give you my analysis, and I share it with you, which is that I did think it spooked the market a little bit. But let's keep in mind they met their numbers. They just didn't increase. The miss was really minor, but they really met them, and they talked about demand being strong throughout the year and through 27. However, everybody expects companies to come out and report better than what they were guiding, or better than what the street is. You never know what the whispered numbers are. So the other narrative is everybody talking about, well, we got another year to go, or maybe we got another 2 years to go, but they're looking at the end of it. So people are thinking, you know what, I don't want to be the one who turns out the lights. So maybe I'd take some off the table. I don't think people necessarily selling their full positions, but they're selling enough with the backdrop today of really strong job numbers. And I think that's exacerbating downside. So here we are. So the question then, is this the beginning of the end, or is this just another opportunity to buy the dip? Well, and again, I don't know the answer to that, but I think it's another opportunity to buy the dip.
Maybe Broadcom's biggest misfortune, Kev, was the fact that they simply came after Micron, Snowflake, Dell, HPE, in which every single one of those, the move after earnings went like that, right, straight up and to the right. 20%, 30%, 30+% moves in a single day. So when you start doing that, and then you're the last person standing that doesn't do that, this is perhaps what happens. I mean, the question is whether dip buyers are going to come in, and when that happens should be the determinant factor of whether this is in fact the start of something bigger, or just a few days of settling and pulling back and then reassessing.
Scott, I love your point. I hadn't thought about them being kind of last in line in that reporting segment, because as we approach some of these IPOs, certainly SpaceX next week, I think a lot of people are looking to take profits in some of these things. Since the March lows, AMD, Micron, Intel, to your point, they're all up meteorically. So
crazy numbers, right? Crazy numbers. AMD insane. From the March low up 150%. Intel 152%. Micron 188%. Marvell 228%. I forgot to mention Marvell in that mix. Throw it in the mix of those that had reported and had rocket ship-like moves on the backside of those earnings reports.
I mean, that's unbelievable. Truly unbelievable.
And you know what? They're up even more, by the way, since the beginning of the year, which makes it more unbelievable. Okay, sorry.
But here what you have is you're on the precipice of an IPO, so people are looking, where are we going to raise cash? In the old days, you would have cash and you would raise it from the things that were real winners. We haven't seen a cycle of IPOs in a long time, so I'm not sure how quick the retail investor is going to come in and buy the dip. I think maybe they hold a little bit of dry powder until next week. I like your ad here. I think it's a good investment, but I don't know that we're going to see the bounce that we've seen.
Here's the problem with the ad, okay? It was an attempted ad, and he got stopped out in the pre-market, which shows you that maybe today was too early to try an ad. You didn't attempt, I mean, you didn't think, I'm assuming, when you added it in the pre-market today, that the stock would be down another 6%. You put a stop in, and then you get stopped out, and now you're out.
Yeah, and the reason why I put a stop in, I bought it yesterday, and I thought there's a little risk to it. But if you take a look, and I look at technicals, I don't really have them define what I do, except on the downside where there's support, because of people like Bill Baruch moving markets on technicals. So if you take a look at where the support was, it was just over 400. Below that, okay, the next support line's about 350. So I bought it comfortably above that support line, which means I lost money on this trade. And it was a small trade. I was going to leg into more. But I didn't want the risk, if this is more than just a couple of day event, of seeing that go down another 15%.
Well, that's
why I stopped
That's
out.
a trade school part of it, of using stops to limit downside, especially in things that are potentially volatile.
Yep.
Like Bill, this one has been. You own the name. I mean, it did get reiterated today by 595 as the price target. 595. It's about 394. 595 at Rothschild and Redburn. So, there are those who are assessing this and suggesting you should get in with this now 12% near decline on the week.
Yeah, we own the name at about a 4% weighting, so it's up there for us. I'm looking at, I said yesterday on the show, at 355, 360 is going to be a huge support level. So we're not going to do anything right now. I mean, in fact, we're more focused on the rotation, is what we've been doing. I've been on the show over the last couple of weeks. We've trimmed tech. We've trimmed some of the top names we've had. We've been buying names like Lilly and JP Morgan and Berkshire. And so we've been rotating a bit and being prepared for this. I mean, at the end of the day, this rotation is what is needed in order for the market to really take its next leg. Every day I get in, I take a look at what are currencies doing, what are rates doing, and then, if rates are going up, and then you're going to have that impact on equities. And that's what we're beginning to see today, because it's a non-farm payroll day, and this was a strong report, but I'm not buying the pricing in of a rate hike right now as well.
Now we're pricing in a full cut, right? I mean, a full hike, excuse me. Freudian slip.
Yeah.
Whether you actually believe that or not is another story altogether. I thought, and I was really interested to hear from everybody first and then get to Jenny, because you have the least amount of tech exposure on the show today, and probably in our orbit, towards the lower end of tech exposure. Are you looking at the makeup of this market now and thinking that you'll finally get a whack at some things that may be opportunistic for you now?
I sure hope so. So, I have a very different response today. My screen's lit up in green. I've got Kimberly, Clorox, Bristol Myers, Pfizer, Realty Income, Sabra, like everything's green on my screen. And as you know, we sit patiently on the sidelines and look for a pullback where we could maybe one day finally own a Google, maybe one day finally own an Apple, because the cash flows, even with the CapEx, are quite amazing. So Scott, I am looking for that and saying like, hey, maybe if this goes too far, it will be, it'll be where we get in. I was at a cool conference yesterday. It was called Macro Minds, and one of the speakers reminded us, which is almost all the alpha is generated in the terrible distressed moments. And I know that's always been true for me too. In the interims between distressed moments, which you don't get very often, you just kind of sit there and like you add a little and you trim a little and you buy a little. But the moments are made when you actually have cash and you're prepared and you have a liberation day, which is when I was able to add that microchip, or you have a pandemic. So we're sitting here like, holy cow, maybe this is the beginning of something where we can get in.
Well, thank you very much for that.
Well, you're welcome.
Just one other observation. So you point out we had all these other companies report. They reported great quarters. But if you needed any more proof that this is purely a momentum-driven market, right, despite that recent memory of all those companies reporting great numbers, raising their guidance going forward, raising price targets, one company underperformed and took it down. By the way, that company, this is not the first time that it underperformed relative to expectations because of their broad customer base, not focused just on AI.